Do you know the difference between tax evasion and tax avoidance? Not knowing could land you in hot water. It's a common misconception that these two terms are interchangeable, or that they refer to the same thing. But in reality, they couldn't be more different. Tax evasion and tax avoidance are two sides of the same coin, yet one side is a legal practice, while the other can earn you a one-way ticket to a legal nightmare. Yes, you heard it right. One is completely legal, and the other is not. It's essential to understand these concepts, not just for your financial literacy, but because they can have significant implications for your financial health and legal standing. So, let's untangle this financial web, shall we? Let's dive deeper into these concepts to understand what they mean and their implications. Tax evasion, it sounds serious, doesn't it? That's because it is. But what exactly does it mean? Well, tax evasion is the illegal act of not paying the taxes you owe by falsifying information or not reporting income. It's like playing hide and seek with the government, but trust me, they're really good at seeking. So, how does one commit tax evasion? Well, there are several ways and none of them are recommended. One of the most common methods is underreporting income. This is when you tell the tax man you've earned less than you actually have. It might seem like a clever idea, but it's not. The Internal Revenue Service, or IRS as it's commonly known, has ways of finding out the truth. Another way people commit tax evasion is by inflating deductions. This means claiming for expenses that were never incurred or exaggerating the ones that were. Again, it might seem like a smart move, but the IRS is no fool. They're pretty good at sniffing out false claims. Then there's the practice of hiding money and its sources. This involves stashing away money in offshore accounts or other places where the IRS can't easily find it. It also includes not reporting income from illegal activities. Now, we don't condone illegal activities, but if you were to be involved in them, not reporting the income from them is a double whammy of illegality. But what's the big deal, you might ask? Well, tax evasion is not just unethical, but it's also illegal. If caught, the penalties can be severe, including hefty fines and even prison time. Not to mention, it's fundamentally unfair. Taxes are used to fund public services we all benefit from, like schools, hospitals, and roads. In simple terms, tax evasion is a big no-no. It's illegal, unethical, and can lead to significant penalties, including prison. You don't want to be the one playing hide and seek with the government. The stakes are just too high. On the other hand, we have tax avoidance. Sounds similar, but it's a different beast altogether. While tax evasion is illegal, tax avoidance is the complete opposite. It's a legitimate way to decrease your tax liabilities using entirely legal methods. The main goal of tax avoidance is to reconfigure your financial affairs in such a way that you can take full advantage of the tax system. Let's discuss some examples to make this clearer. One of the most common methods is tax deductions. These are specific expenses that the government allows you to subtract from your total income, effectively reducing the amount of income that is subject to tax. These could be work-related expenses, medical costs, or even charitable donations. Another method is tax credits. Unlike deductions, which reduce your taxable income, credits directly reduce the amount of tax you owe. For instance, if you owe $2,000 in taxes and you have a $500 tax credit, you only have to pay $1,500. These credits can be related to education expenses, energy-efficient home improvements, or adopting a child, among other things. Then we have tax deferrals. This method allows you to postpone your tax payments into future years. Retirement accounts like 401(k)s and IRAs are common examples of this. By contributing to these accounts, you can defer taxes on the amount you contribute until you withdraw the money in retirement. Finally, there's income shifting, which involves shifting income from a high tax rate entity to a low tax rate entity. For instance, parents in a high tax bracket might shift income to their children who are in a lower bracket by giving them income-producing assets. In essence, tax avoidance is just smart financial planning. It's legal, ethical, and encouraged. It's about using the law to your advantage, to reduce your tax liabilities, and to keep more of your hard-earned money. All of these methods are there to be used, and there's absolutely nothing wrong with using them. They are a part of the system, and smart tax planning is all about understanding and using the system to your advantage. So, why not make the most of it? Now that we know what each term means, let's compare them side by side. Envision two paths leading to a common goal: reducing one's tax liability. One path is dark and treacherous, filled with risks and consequences. This is tax evasion. The other path is brightly lit, guided by rules and regulations. This is tax avoidance. Tax evasion is an illegal act of intentionally misrepresenting or concealing financial information to avoid paying tax. It's like playing hide and seek with the taxman, but the penalties for being found are severe. They range from hefty fines to imprisonment. Picture this as a risky game of chance where the stakes are high and the odds are stacked against you. On the other hand, tax avoidance is the legal utilization of the tax regime to one's advantage to reduce the amount of tax that is payable. It's like navigating through a complex maze, using the rules to your benefit. The key here is that tax avoidance operates within the boundaries of the law. It's a strategic game of chess, where knowledge and planning can lead to victory. In terms of ethical implications, tax evasion is seen as morally wrong, as it contributes to the inequality in society by shifting the tax burden onto others. It's like refusing to pay your fair share at a communal dinner, leaving others to pick up the slack. Tax avoidance, while legal, is often viewed under a critical lens as well. Some argue that it's merely a smarter way to approach taxation, akin to finding a coupon for your favorite restaurant. Yet others contend that aggressive tax avoidance can be unethical, especially when it involves large corporations exploiting loopholes to pay insignificantly small taxes. As you can see, while they might sound similar, tax evasion and tax avoidance are worlds apart. One is a risky gamble with serious consequences, while the other is a strategic move within the bounds of the law. One is universally frowned upon, while the other can be a gray area subject to debate. So the next time you hear these terms, you'll know the difference, and more importantly, you'll understand the implications. So, why should you choose tax avoidance over tax evasion? This is the question we're tackling now. Let's cut to the chase. Tax avoidance is the smart, legal, and financially savvy approach to managing your tax obligations. First and foremost, tax avoidance is entirely within the bounds of the law. It involves using the tax code to your advantage, taking full advantage of deductions, credits, and exemptions to minimize your tax liability. This is entirely different from tax evasion, which involves illegal practices like underreporting income or claiming false deductions. When you choose tax avoidance, you're choosing to respect the law while still seeking to minimize your tax burden. Reducing your financial burden is another key benefit of tax avoidance. By making the most of legal deductions and credits, you can significantly reduce the amount of tax you owe. This isn't just about saving money, it's about empowering yourself financially. The money you save can be reinvested into your business, used to build your savings or put towards other financial goals. It's about taking control of your finances in a proactive, strategic way. And then there's the role of tax avoidance in promoting sound financial planning. When you take the time to understand the tax code and how it applies to your situation, you're not just avoiding taxes, you're gaining a deeper understanding of your financial situation. You're learning to plan ahead, to make informed decisions about your money. This kind of financial literacy is invaluable, and it's a skill that will serve you well in all areas of your life. Of course, it's also important to consider the risks and consequences associated with tax evasion. Penalties can include hefty fines, prosecution, and even imprisonment. Plus, the damage to your reputation can be devastating. Why take these risks when there's a legal, beneficial alternative? In the end, tax avoidance is not just the better option, it's the only option if you want to stay on the right side of the law. It's about being smart with your money, respectful of the law, and proactive in your financial planning. So, what's the takeaway from all this? We've journeyed through the intricate world of taxes, distinguishing between two crucial concepts, tax evasion and tax avoidance. Tax evasion, the illegal act of deliberately misrepresenting one's financial status to the tax authorities, is a perilous path that can lead to hefty fines or even jail time. On the flip side, tax avoidance is the legal utilization of the tax regime to one's advantage, to reduce the amount of tax payable by means that are within the law. It's a smart, informed way to manage your finances, and it's completely above board. The importance of understanding these differences cannot be overstated. By being aware, you can make informed decisions that align with the law and protect your financial health. Remember, when it comes to taxes, knowledge is power. Stay informed, stay legal, and stay financially savvy.